Stocks pull back as tensions in the Middle East escalate and crude prices surge. Healthcare stocks eke out some gains, while oil marketers and Realty are the big drags.
Days after MCX got a nod to kick off trading in electricity derivatives, the National Stock Exchange too has got the regulator's approval to enter the segment, upping the ante in the promising space.
Tata Power MD and CEO Praveer Sinha says the company is focusing big on hydro and pumped hydro projects, even as he sees more opportunities emerging in the power, evacuation, distribution and nuclear energy space.
Raymond Group Chairman Gotham Singha tells CNBC-TV18 he is spinning off businesses so that they are professionally run, even as he remains tight-lipped on succession, suggesting the promoters may just remain owners.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vivek. Well, it's turning out to be a session where we are definitely seeing red on the screen this Thursday. So we have the mid-cap index, which is down around 1% at this point in time. We have the Nifty, which is down around over 100 odd points. So weak, you'd have to say, for the advanced decline ratio, the breadth of the market not too inspiring at this point in time. But stocks which seem to be bucking the trend are a couple of these consumer slash, some of these consumer slash healthcare stocks. So we have Asian Paints, which is up around 1.6%, Sun Pharma, which is up around 1% Apollo Hospitals not doing too badly, along with even Divi's Labs, which is up around 1%. But overall, breadth of the market and the texture is weak today, Vivek.
That's right. Good afternoon, Ekta. Good to see. What's actually transpired over the last couple of trading sessions that, remember, till yesterday, the Nifty actually saw a 6-day consecutive running streak. Today, that clearly set to cool off, if for another 3.5 hours, we continue to trade in the negative territory. The mid-cap and small-cap space continue to trade weak. The advanced decline ratio continues to remain quite weak. There are a couple of stocks on the radar. Well, the first one has to be Paytm. There has been a clear clarification coming in from the Finmin Twitter handle, indicating that there will, at this point of time, they're not considering an MDR as far as UPI payments are concerned. The stock at one point of time was pushed at the lower circuit, but since then has recovered off the day's low. So that's one particular stock clearly that's seeing significant volatility in the session today. But moving on, remember yesterday's big story was the move that we saw in the entire alcohol stocks. Remember, Maharashtra government day for yesterday increased the state excise duty on Indian-made foreign liquor by over 50 to 60%. A new category of grain-based foreign liquor called Maharashtra-made liquor has been approved. We are now joined by Vinod Giri, Director General of Brewers Association of India. Thank you so much, Mr. Giri, for joining us. First up, was this along expected lines, especially the quantum? It's quite a steep hike, and drinkers will now have to pay a significantly higher amount to enjoy their tipple as far as Maharashtra is concerned.
So just to contextualize it, this is a kind of tax reform in a way which the government is undertaking. The fact is that the beer prices were increased by about 18% way back in 2018-19. That was a part of the reform exercise. For COVID and then subsequently for various reasons, there was no tax increase on the spirit side, the IMFL and country liquor and everything. So this, in a way, is making a correction for that. The fact is, in the last 10, 12 years, the beer taxes have been increased by nearly 32%, whereas IMFL, I think, is about just 9%. In the last 10 years, there has not been any change in IMFL taxes. So, in a way, it was something long overdue. It appears large because it's happening after a long time, but the fact is, other segments the taxes have been revised regularly, whereas IMFL and liquor segments were let off. And just to give you put the context, 10 years back, beer price used to be for the standard, that 650 ml bottle. It used to be about 110 rupees. Today, it's 190 rupees. Compare that with the IMFL, your typical that Nips, which competes with beer, used to be 130 rupees. It's gone up to just 150, 160 rupees range because there has not been any increase in the taxes all this time, except for some increase in VAT. So in a way, the beer, which used to be actually about 20 rupees cheaper than IMFL, the spirits, is now 30-40 rupees more expensive. That's something that as a policy measure, no government likes to do. Beer is a drink of moderation. They tend to tax beer more favorably in that sense. So I think it's a correction which has happened. And it's not excise rate increase is probably a wrong term. It's more like a tax restructuring and reforms.
Okay. Well, Mr. Giri, that point is taken that it's probably long overdue because I think the last revision came in 2011. So it is, long overdue. But nonetheless, that means that cost is going to go up. So in your sense, how exactly is demand going to be impacted according to you?
See, in the last, say, about 10 years, the demand for liquor or the sales for IMFL, at least I can talk about, that has gone by a CAGR of 7% year after year. That's a seriously strong growth. So there has been enough in the tank. So we may see a bit of slowdown happening when the market adjusts to the prices, but also we have to bear in mind these are the kind of prices which are prevailing in neighboring states like Karnataka and MP. So it's coming to that level. So I think there may be initial a bit of it'll take a bit time for the market to settle in, but I think the market will maintain its normal healthy course. 7% may be difficult to sustain in these conditions, but yeah, I think the damage is not going to be lasting on any.
True.
The beer will improve, of course, which means the industry which has been flat for the last 10 years, there has not been really any increase in the beer sales.
Right.
So that will come back to growth, which will be good for the industry.
Mr. Giri, if possible, can you quantify the last time you said that the hike was seen as far as the beer segment was concerned and IMFL was left out. So what was the incremental shift in volumes that you saw, especially in terms of consumer preferences towards IMFL? What percentage of it do you expect to come back? And you did mention that last couple of years beer growth has been flattish. Given this excise duty, especially in the state of Maharashtra, could you pencil in or could you quantify the kind of growth you expect in the beer space?
So let's say not last couple of years, if I take last 10 years, which is a very stable data platform. So the CAGR for beer has been about 1%, which is almost flat given the conditions. In the same period, the CAGR for IMFL has been 7%, which is way above the rest of the country. So I think we'll see a bit of correction in that. If you look at the national numbers, the growth numbers for spirits in India, pan-India is about 3%. The growth numbers for beer, pan-India is about 9%, little over 9%. So we will see that kind of correction coming. I expect the IMFL growth will come down to more realistic levels, and beer will rise up to the numbers I mentioned. At least I would imagine, and it's anybody's guess. It should be closer to the national growth numbers, which is about 9 to 10%.
Okay. What is your take on the government carving out this special category for locally made liquor?
So this we have seen this trend in a few other states like Rajasthan, we have seen in UP, we have seen. So it's a category which is between the country liquor and IMFL. The stated objective for this category is uptrading people from the country liquor to IMFL and always stop by in this new created segment. The quality of the product is expected to be better than country liquor and slightly below the bottom end of IMFL. And so it's a kind of in-between thing is being created. It's a new slab being created. It does reasonably well in some of the states. 10 to 20% share it can take off from the spirits industry. So we'll see how it is, because some of the, especially in states where a lot of country liquor is being produced from molasses, and Maharashtra is one of them. The fact that entirely grain-based spirit producers come into this country liquor plus or IMFL minus segment does make a difference in the quality. So this segment will have some impact. I think the government is going to gain more revenues out of this.
Okay. When the government is going to earn more revenues out of this, can you give us a sense in terms of how much you're probably anticipating it as to become in terms of a category?
So the government estimate overall is 14,000 crores. they think they will earn through this exercise.
Okay. Mr. Giri, a very quick answer we want from you, sir. Number one, how do you see customer trends now shifting, especially in the state of Maharashtra, given the fact that over a 10-year period, the consumption growth itself has been flattish? And number two, how are barley prices trading? And do you see or do you feel the margins as far as beer players are concerned can improve materially from here on?
Yeah, it's see, at the end of the day, the profitability is large components are the packaging and raw material. The rest of the taxes we keep out. Even though in India, almost 70% of the value chain is in taxes, so that makes all big difference. But if you go back to the raw material, I think the barley prices are now stabilizing, and we had seen a very traumatic time when after the Ukraine war, which used to be a big supplier of barley. So now at least we have a certain certainty on that. The glass is also cooling down. So I think on the cost front, I don't see any major hit coming the beer industry's way. It looks pretty stable. Taxes remain a big concern because they are the largest, by far the largest chunk of the cost value chain.
Okay, all right, Mr. Giri, we're going to leave it on that note. Thanks very much for joining in and speaking with us. And I'm sure we'll touch base when we have more data in terms of what the impact of the excise duty hikes would be as well. That's the perspective which is coming in. Remember that yesterday was a tough day for a lot of these alcohol stocks. We'll take a short break, but a quick update. Unlock a new dimension of business intelligence with CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. From market-moving insights and thought leadership to exclusive access to marquee events, journalist interactions, studio tours, and high-impact learning sessions. This is a truly elevated experience with members also enjoying curated lifestyle privileges and perks. The power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to CNBC-TV18.com/access/plans. Welcome back. Well, still weak for the markets, and there are specific stocks which continue to be in focus, such as Paytm, which falls after the Finance Ministry clarified its stance on merchant discount rates. Makshi is here to give us more details on it.
Well, Ekta, there was a lot of speculation in the market with respect to the MDR, and resultantly we did see the Paytm spike up in trade on that particular day. But today, the stock again is in focus because the Finance Ministry has gone ahead and clarified that they have no plans to levy MDR charge on UPI transactions. Keep in mind that MDR is nothing but the merchant discount rate. It is the fee that is charged to merchants for accepting digital payments, and it is usually a percentage of the transaction amount. Currently, there is no MDR that is applicable on UPI as well as RuPay debit card payments. In fact, when the earlier news had come out, there was a lot of speculation going around. That time, it was viewed as a positive because Paytm could have monetized its payment gateway services more effectively with the reintroduction of MDR. But given that the Finance Ministry has now gone ahead and clarified that there is no such plan, it is a sentiment negative for Paytm. In fact, UBS has also written on the same. They have a neutral call target price of 1,000 rupees per share. They say that the delay or non-introduction of MDR is sentiment negative for Paytm. They were building in 1 basis point contribution to Paytm's net payment margin from either introduction of the MDR or increased incentive as compared to the budget. Given that this is absent, there could be a nearly 10% downside risk to the company's adjusted EBITDA for FY26 as well as 27. That is the note coming in from UBS. Overall, the whole development is negative for Paytm. Resultantly, the stock is down and out in trade.
Okay, absolutely. The stock, in fact, is down 15% from its 52-week high of around 1,063 rupees. So currently at around 905 rupees, down almost 6% at this point. But we have a lot of stocks in focus which are buzzing on the back of large trades, from Asian Paints, Eternal to C Info. D Street has seen a lot of block deals today. Vivek, you've been tracking this. Tell us more.
Well, that's right. So all through the week, we've been telling about multiple block deals that have taken place. Today, in fact, we were caught by surprise. A couple of large blocks have taken place, and there wasn't really a term sheet that came out, especially as far as some of the investment banking space was concerned. But we'll have a look at each of these large deals. The first one, of course, was CE Infosystems or Map My India. So we accessed the term sheet. This particular deal was launched late last evening. So PhonePe Private, that now holds a little over 18% stake at the end of the March quarter. We understand trimmed over 5% equity in today's block deal. The floor price for this particular deal was at 1,750, and this particular deal helped PhonePe go ahead and mop up a little over 470 crore. The other large trade that took place was in Eternal, earlier known as Zomato. Almost 61 lakh shares traded in the block deal window. The total quantum of the deal was over 250 crore. But the biggest deal of them all actually took in a Nifty company, and that was Asian Paints. Completely caught unawares, almost 3.6% of the total equity changed hands, and the entire stake was absorbed. This particular deal happened in the block deal window itself. The price at which this particular deal took place was at 2,201 rupees a share, post which you can see there has been a significant increase as far as the stock price is concerned. The seller has managed to mop up over 7,700 crore. It will be very important to watch out for, especially in Asian Paints, who was the large seller. And, the list of buyers, Ekta, will come out only post-market hours today, so we'll have to wait for the exchange data in the evening to find out the list of buyers in that particular name.
Okay, all right. Thanks, Vivek, for that. So Asian Paints, however, bucking the trend, up around 1.6%, one of the top gainers on the Nifty today. Premier Energies is on our radar after a large trade took place in the stock earlier this week, where South Asia Growth Fund 2 sold around 5.5% stake. Earlier, we did speak to Vinay Rustagi, who's the Chief Business Officer at Premier Energies, on the outlook. Listen in.
As part of the process, the fund has given an indication that they will retain their balance equity for the next 5 years. For the next 5 months at least. In any case, I think, from our point of view, we are pretty neutral. What does the fund decide? Because we have a pretty liquid pool of large marquee shareholders, and the business is in a very strong footing, irrespective of what the fund decides to do with the shareholding. So what we are doing is we are currently almost doubling our capacities, what we have in terms of cell and modules. We are going up to 8.4 gigawatts and 10 gigawatts over the next 1 year. And then we are also going backward integration into ingot and wafer manufacturing. We have announced additional forays into battery storage and inverter manufacturing. And there we will consume about 800 crore rupees of cash. In terms of, you mentioned how we plan to fund this CapEx. So our intention right now, because the company is sitting on surplus cash and generating a lot of cash in terms of internal accruals, our intention is to fund this with internal accruals and some incremental debt. We want to be pretty conservative in terms of how we manage our capital structure. We want to stay at the boundary condition that we have set ourselves is about 1.5 times debt to EBITDA, which is very, very conservative given the overall industry dynamics.
Well, after a large block deal, the seller will have to wait for an additional 5 months before they can go ahead and further trim stake. As far as Premier Energy is concerned, today the stock is down almost 2.7%. It's now time for a short break. Aditya Agarwala from Invest for Edu will join in with some trading strategies on the other side. Stay tuned.
What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regret. And the only way to live is to live like an entrepreneur. Nature wants you to do that.
What would you consider today your highest conviction bet?
The abiding faith that India's time had come.
What is holding us back?
We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a news story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
What, to your mind, is your leadership language?
So the leader or a CEO has two roles, one of a mother, one of a captain. In the Infosys journey, not from public, but much earlier, right? Mr. Murthy was a mother.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं कि we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back to HTR. Especially in the last half hour of the trading session, we've seen quite a bit of a sell-off emerge, especially as far as the FMCG pack is concerned. A couple of FMCG stocks that have significant weightage as far as the index is concerned are at the day's lowest point. The index itself is down over 1%. Have a look at HUL, Hindustan Unilever. That particular stock is at the day's lowest point. Marico, another one, and Dabur is down over 2% in today's trading session. So the FMCG pack today definitely pulling the market lower. But as promised, Aditya Agarwala, Head of Research and Investments at Invest for Edu, joins us on the show. Good afternoon, Aditya. Thank you so much for joining us. We are seeing a bit of profit booking emerge across all of the indices today. Do you feel that there's a near-term top, or do you feel this is just a pause before the rally resumes?
Hi, good afternoon, Vivek. Thanks for coming to the show. I think it's just a pause because if you take a look at the VIX, it's comfortably trading below that 14 mark. In fact, closer to about 12.5, 13 odd levels. So that tells you that market participants are pretty comfortable at current levels. There's nothing too much of a panic in the market. And with this kind of a level on VIX, I think markets will slowly and gradually inch higher. What we are witnessing in last 2-3 trading sessions is more of a consolidation on the Nifty, especially on the downside. 25,000, 25,100 has been acting as a good support. Now that 25,100 has broken in trade today, I think 25,000 to about 24,900 should act as an immediate support now. I don't see too much of a panic in the market. In fact, if anything, one should use this consolidation and minor correction as an opportunity to go fresh long on the index, especially the bank Nifty, I think, Vivek, because given the fact that it has already corrected in 4 trading sessions from 57,000 to about 56,200 now, and on the downside, 56,100 happens to be a good support area. So my sense is next week, you will see a leadership emerging from the banking index, and that could lead the rally in the Nifty as well. So at current levels, I wouldn't shy away from taking a long position in the bank Nifty. Place a stop loss just somewhere below 56,000, and maybe you will see levels in excess of 57,000 in the coming trading sessions, maybe next week as well. As far as Nifty is concerned, that too, I think, is going through a decent consolidation. Maybe once you see markets clawing back above 25,100 on the Nifty, you will see a short covering rally to levels of 25,300 or 25,400.
Okay. Aditya, in terms of specific stocks, what are you tracking today?
So buy recommendations, Ekta. One is Apollo Hospitals, a very interesting chart setup. Stock did witness a good pullback in the morning. From there, we've seen a bit of a cool off. I think this is a good opportunity to go long on the stock for a target of 7,200 on the upside. The stop loss at 6,900 on the downside. The second is Max Healthcare. That is also looking quite interesting to me. A fresh breakout from a downward sloping channel. At current levels, there'll be a buyer in the stock. Look for a target of 1,400 on the upside. And once 1,400 is taken out, I think 1,500 is also possible here. 1,100 on the downside should be a stop loss. Both the stocks, I think, are good trades for positional as well. So one can hold on to it for at least a month or so, and you will see decent upside in these stocks.
Thank you so much, Aditya. So 2 stocks from the hospital space are on your radar today. Thank you so much for joining us, giving us a view on the markets as well as your individual trading calls. Well, before we slip into a short break, some updates for our viewers. Remember, you can stay updated on your favorite stocks with Money Control Super Pro. Receive real-time alerts with AI stock update feature of Super Pro and get insights on key corporate announcements on stocks of your choice for quick decision making. Get your investment superpower today. Subscribe now.
Welcome back. Well, let's get you a CNBC TV18 exclusive. Our colleague Shilpa Ranipeta caught up with Gotham Singha, the chairman of Raymond Group. Shilpa asked him about his plans for the group's global opportunities, real estate business and engineering business, as well as his succession plans. Listen in to excerpts of that conversation.
It's very simple. I mean, I think Trump hates India, but he hates China more. So there's always going to be a bigger delta between India and China, and as a result, India will win. I mean, this is a very high level way I look at it. I think 9th of July, when his 3 months gets over, you'll have a little more clarity on what FTAs he's signed, etc.
Just wanted to talk about the lifestyle business. Now, the last fiscal has been relatively slow. The last quarter also, we didn't. The performance was a little bit subdued.
We had a big issue last quarter.
Which was the ransomware attack. Yeah, but even on an FY25 level, also, general consumer sentiment has been slow. How do you see as we enter into FY26?
Think Q1, I think, is looking okay to me.
Okay.
So our last quarter last year was really impacted because of the ransomware. We lost almost 25 days of business. Yeah. So we'll take out 25 days of a quarter. It's 30% of the quarter is gone. So it's very difficult. Mm-hmm. But I think the first quarter is looking okay. I don't see any big challenges right now.
Right.
And we're already sitting almost middle of June. So if I look at 6 months out, just picking up general parameters, wedding season is very strong.
Let's talk about the realty business, Mr. Singhania. That has been one of the fastest growing, though you said, yes, of course, on a smaller pace. What is your sort of growth trajectory for FY26 there looking like? And what do you see, whether in terms of the JDAs also that you've been signing, how do you see the growth coming in for FY26 for the realty business?
No, I think the real estate opportunity we're seeing in a city like Bombay is a once-in-a-lifetime opportunity. There's so much work for everybody. Mm-hmm. We grew very well last year. Mm-hmm. Again, like I said, stated policies, EBITDA growth 20%, 15% top line, but we should do better than that.
Right.
Real estate is such a business, it's, project to project. It's how many projects you get. We've got 6 JDAs so far.
Right.
We're working on a lot. Now, suddenly you could get 2 or you could get 20, one doesn't know. But we're in the right direction. We've shown very healthy growth, I think 45% last year, which is a good number.
Have you fixed up a date for listing?
It should be in the first week of July, but they're variables. So, should be the first week of July.
All right. And these JDAs also that you spoke about, the 6 ones that you've already signed, right? How many projects do you think you will be able to launch in the first quarter and also in
we already launched one. Bandra East has been launched. I'm hoping we should launch up to 3 new projects this year.
Are you looking at the automotive, the aerospace business being a subsidiary?
So right now, everything is a subsidiary. We're going to make aerospace one subsidiary and real estate, auto components and engineering as separate subsidiaries. So currently it's a subsidiary, will be split into 2.
Right, fine. And you stated a while earlier when we were speaking about how there is huge opportunity in this space, right? Where will it come from? Will it come from the aerospace or defense?
Aerospace is big. Make in India is a big opportunity. So I think similarly, we're back to the China plus one story. I mean, companies are saying that we need to have presence in India.
Right.
India is a space we have to be.
And even for this Raymond Limited now also going forward, the top line and the EBITDA targets that you have is the same 20% and 15%? Stated for every group. What are the kind of projects that you're looking at in the automotive and in the aerospace and the defense space where you've stated that there's a lot huge opportunity?
We're looking at a lot of stuff. It's premature to talk. We've got the Paris Air Show next week. So let's see what comes out of that. It's a very big show. A lot of people there. Right. I'm going to be there next week. So I think there's a lot of opportunity. Let's just keep our fingers crossed and hope for the best.
Now we're talking about you've been running this business now for 25 years since you took over?
More. I've been running it. I've been in the group for 45 years.
45 years. Okay. I mean, at the very helm as the chairman.
26 years.
Now, when you look forward, how are you looking at the succession, Mr. Singhania? Are you also looking at bringing your children into the business?
My kids are too young. They're not going to come in, which is why I've got professional boards, professional management. Everybody's incentivized.
Right.
My daughter's 20. I don't think she's coming in for at least 5 years if she decides to come in. So we've got to professionalize the company. We've got to protect the shareholders. And that's what we're doing, so which is why you're seeing this whole split up into 3 companies, 3 top-class boards, 3 sets of governance, best-in-class governance, best-in-class management, and that will ensure that, I have to differentiate between management and shareholders.
Fair enough.
I have to move back as a shareholder and get the best-in-class governance, which eventually, if I get good return on my shareholding, that's wealth creation for my family. So
fair enough. So there is no thing about you want your children to come in that is completely...
That's a personal discussion. We can have that some other time.
Well, a very interesting conversation there with Gotham Singha from the Raymond Group with our colleague Shilpa. Well, it's now time for a short break. On the other side, Manisha Gupta joins in with DN Pathak of Soybean Processors Association of India. Stay tuned. Welcome back to Halftime Report. Well, it's that time of the segment or that time of the show when we move across to commodities. Manisha Gupta joins in with more details.
Thank you so much for that, Vivek. And I have a guest with me, Mr. DN Pathak is ED SOPA, and he joins us live on the show. Mr. Pathak, hi, thank you so much for joining in. And we understand that you had this big meeting yesterday with the Food Ministry, with various ministers and associations participating into this. What has been the tone and crux of that meeting, especially when the associations have been told to tell their member companies to adhere to the price decline that has come in with the duty cuts for edible oils?
And how they were told. The meeting was yesterday. I joined in as live, and there was, from the associations, there were several people, including presidents of some associations. The secretary made a presentation, and he showed by a chart that the prices have not declined after the duty cut, which they should have. He also showed in the same chart that when the duty went up, the prices went up immediately. So how did the industry explain this? And the representatives of the industry, of course, there is certainly a time lag between the duty cut and that less duty paid material coming into the market, which is a very valid point, which was quite well understood by the secretary and the officers. It was also perhaps mentioned by the trade that when the duty goes up, the trade takes the same risk that it cannot charge a higher price on the already held stock. So there is the other way around. The secretary, of course, is very concerned, and the government is deeply concerned about the inflation and the price rise. So now they have requested all the industry associations, in fact, this is an order that a weekly price will be given by the soybean, so by the oil suppliers, oil makers, processors, as to what was the price today and what it is next week. So gradually it should show a decline, factoring in the duty reduction. We are circulating this to our members. I'm sure the other trade bodies will do that. And most of the major suppliers and the branded suppliers and people, they will certainly adhere to this. And price reduction will be certainly reflecting in the next 1 week, certainly.
Mr. Pathak, would you say that this is yet again one more regulation coming in on for edible oil, not just the associations, but the companies that they're in, where you have to update on a weekly basis what is the MRP that you're charging on your edible oil packages?
I'm less worried about that and more worried about what can come later. I mean, the tone and tenor of the government's decision seems to be that this is something where more regulations, yes, you're right, and maybe even some kind of inspector laws coming in, which will not be in good stand for the industry, for the trade. There may be one odd person who takes some advantage, which will always happen in such a large industry trade. We import 16 million tons of oil, which is quite a huge quantity. But by and large, the entire trade in the industry, like I can tell you for soybean, of course, our members don't import oil, very few of them do. But the day the duty was cut, on Monday, which is the next opening day, the price of soybean oil was down by 7 rupees a kilo. So it isn't that the duty, the market has immediate effect of either any increase or any decrease. So I think this monitoring of a weekly price rise will be limited to this monitoring only, and it will not go further, wherein the people start going to factories and then, I don't know, maybe that will happen because this was hinted, of course, by one of the officials that if the trade does not behave, then they will have to be forced. And I agree with the government that if the duty has been decreased, then the benefit must go to the consumer. Otherwise, there's no use. It is not for the traders or the manufacturers' benefit for their profiteering. It is for the consumer. So by and large, I'm sure the consumer will be the only one who will be benefited. And the strictness in the government action will stop here. And the trade will certainly be very happy to give the prices and what is the price now or what was a week earlier. Let's see how it works.
Mr. Pathak, also the increase in MSP and a cut in import duty came like clearly back to back, and then these meetings as well. How is the trade, consuming MSP hike on one side and the import duty cut on the other side? Who really do you see benefiting here? Because this inflation has been a concern one, and we're looking into getting into high demand periods very soon.
I certainly see this move like giving with one hand and taking back with the other hand in the same day almost. I mean, the MSP hike was and the duty reduction, they were so close together. So we've not been able to comprehend as to why this is. Of course, we know that the explanation given is that the duty differential was the problem. And certainly local manufacturing has to be addressed. But then on the other hand, the total Atmanirbharta or really local is the processing industry. Now this move has worked well for the refiners of crude oil. But how will it work for the processors? Totally against the processors. We are already reeling with a low margin, in fact, no margins, and a huge disparity. On top of that, the duty reduction has certainly added, salt to the injury. See that today's MSP, the soybean price for export will be $621. The soybean meal price. Soybean meal price in US, Brazil, Argentina is $330. With that kind of thing, how will the industry work? In the local parlance also, the local feed industry would want feed at a lower cost, the poultry industry. They're already complaining that the feed cost is higher. Now, we don't know how can we adjust. On the one hand, you have a high raw material cost. On the other hand, you want the end product to be sold at a lower price. This is completely paradoxical. It just cannot be done. We don't care what the price of soybean is. I mean, if it's 7,000 rupees or 3,000 rupees, processors don't care. What we need is at what price we buy soybean, we should be able to get in return from BOC sale and from oil sale. As long as that equation works, the price does not really matter to us.
The industry, of course, would want to.
It is not, I don't think it's in the right direction.
It is not. But clearly, that is something that the government isn't listening to right now, is it, Mr. Pathak? Because what you really have had a meeting with the Food Ministry, and that really has been the case as well, Ekta, where the companies have been told to lower edible oil prices, and the rest of the concerns, as Mr. Pathak said, hasn't really been addressed as of now.
Okay, all right. Hopefully, it would probably be taken up in the next couple of months. But Mr. Pathak, as well as Manisha, thanks very much for joining in and taking us through that conversation. We need to take a break now with the news that the markets are still under pressure. We have the mid-cap index, which has recovered a tad bit from the day's low, so it's just about lower by around 0.5% as compared to a steeper cut that it was showing when we started off. We'll take a short break, but we'll get you more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report. Well, one particular section of the market that's seeing a bit of a bounce back is the mid-cap IT space. With names like LTI Mindtree, names like OFSS, Wipro, all of these stocks have seen quite a bit of a recovery. In fact, some of the large-cap names like TechM, that too have seen a bit of a recovery. So TechM, again, you saw a note coming in from Kotak today morning where they've met the management and they've reiterated their positive stance on that particular name. One mid-cap banking stock that saw a bit of a sell-off in the week gone by was RBL Bank. Last couple of trading sessions, that particular stock was under significant pressure. But today, RBL Bank now trading near the day's highest point with a gain of close to 1.5%. What's not doing so well? It's the entire metal and mining pack. So names like Tata Steel, JSW Steel, Jindal Steel, all of these stocks seeing quite a bit of a selling pressure. But with that, it's a wrap on this edition of Halftime Report. But here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.